It's Tesla. The shares are jumping. We did have a batch of upbeat news driving sentiment on Wall Street, including a note from Morgan Stanley's Adam Jonas. Pras Subramanian's here with the details. And we were talking a little bit about this note earlier, but it's very interesting that he looks at this company, and I guess he has for a while, as bigger than just cars.
Yeah, beyond an auto company is what he's sort of saying. There's a way to drive his bull case, I guess, for the shares of the company next year in 2024. Looking ahead to things that are non-auto, non-core is what he says to the business. And it's funny because he mentions in the note later on that he has got significant pushback from clients about this, and he still hey, you know what? No, I'm a true believer in this stuff. Like, for instance, Optimus robot, Tesla adjacent technology, tech that could upend the label market, Dojo supercomputer. We talked about this before. The supercomputer that can be used for any number of purposes like AWS, in that sort of a realm of possibilities for the Amazon, sort of, huge EBIT mover with AWS. Also noting their edge AI. Imagine your car is a robotic edge AI device. Beyond just collecting information for, FSD, imagine the key for your car is a phone, for instance, a Tesla phone, right? Stuff like that. I also want to note the EV infrastructure kind of boost there. As GMs and the Fords of the world pulled back on spending, Tesla can step up on new spending for AI, for FSD, for their supercharger network, which they're using legacy OEMs for, that sort of thing.
And how much price is also the bullishness there? Because is his bet also in part he's looking at rivals who are kind of pushing out these EV-related investments and saying, okay, that's runway for Elon Musk?
Right, as the legacy guys pull back, gives you an opportunity to push in and spend more and gain more market share in those Tesla car adjacent stuff, right? Software, supercomputing, and the EV infrastructure stuff like the charging networks we're talking about. That's sort of a big deal there. But I just want to note that it's funny because not funny, but it's his model for 2030 and beyond includes these services as being a huge factor in Tesla's profitability and revenue growth there. So it's something that we've seen other bulls like Dan Ives talk about that as well. It's just so far out that I think that's why clients are saying, hey, what about next year?
Well, next year he says auto margins are going to go down.
Yeah,
They're going to be lousy.
Potentially negative operating margin, which is that's first I've heard of that, but he's still noting that and saying, hey, you know what? Look to the long term, not just 2024.
Together with several other analysts, Tesla is a diversified energy firm that aims to speed the transition to a clean and renewable future. Tesla has transformed the automotive sector with its EV's autonomous driving and battery innovations. Morgan Stanley has demonstrated the enormous potential of Tesla's business plan and has reiterated its positive outlook for the company and its shares. In addition to price reductions and declining margins, the American Investment Bank recently estimated that Tesla may produce up to 2.25 million vehicles by 2024. But that's not even the most intriguing part. Why is the investment firm so optimistic about Tesla? Let's find out. Morgan Stanley analyst Adam Morgan has also expressed his strong optimism that Tesla would continue to form partnerships with global leaders in order to secure supplies of battery materials and grow its gigafactories.
And as we look at what's going to be happening with some of these tax incentives coming off, when you look at Tesla, what does that mean for the competitive space here? When you look at, you have established Tesla, you have some of these legacy brands as well, but you also have some of these startups and people are sort of hopping onto these trends, starting to fall by the wayside.
Yeah, and that's really a big element because tax incentives that are driving a lot of these sales are shifting around. They shifted a bunch when the Inflation Reduction Act went through, and then they're shifting again on January 1st in some ways that are helpful for some companies and more hurtful for others. It appears that Tesla is going to be losing its tax benefit, the $7,500 credit, on January 1st, which seems odd because it's based on domestic production and Tesla's a very domestically oriented company. I've heard theories from people that suggest there was maybe a planned, maybe they didn't fill out the paperwork right. They want this to happen, telling everyone, oh, we're losing the $7,500 credit on the January 1st. Better buy your car now. And then maybe January 5th, January 10th, there's a application process. Oh, wait, we just didn't dot the right I or cross the right T. We've got the $7,500 credit back. Not that Tesla or Elon would ever, maneuver a stunt like that to sell more cars, but some people are suspecting that could happen.
With that said, though, affordability has been a big issue in terms of adoption. Tesla, a lot more affordable with that $7,500 tax credit. We just showed the market share. 56.5% is what Tesla has right now. How does that shift without those incentives? Who do you think is likely to become a bigger player in 2024?
I think Ford is pretty well positioned right now. GM needs to be building more cars. They keep launching cars, but not really building them. And then I feel like the Koreans are building some of the best EVs on the market right now, but they don't get the incentive either unless you lease. So it's actually, I don't really see any obvious benefits for any companies. Every one of them is facing some challenges. You've got incentives issues, you've got market issues, you've got pricing issues, macroeconomic factors that are slowing down the purchase of electric vehicles. I don't know. It's hard for me to think who would jump into any vacuum created by Tesla, but I would argue that we've seen Tesla's share, you're saying it's about 56, they're down to about half the market. And of course, they were the overwhelmingly dominant player just a few years ago. Every day, every month, every year, we see more cars entering this marketplace, making them less dominant.
Carl, as we increasingly look at Tesla, almost more so as a tech company than a car company here, what does that mean in terms of expectations for next year and how it's positioning itself?
Well, they've got the Cybertruck coming, which a lot of people would love to think is going to tap into this highly profitable, massive volume truck market that Ford and Chevrolet and Dodge and Ram have been benefiting from for decades. I don't know if that's really going to work because the truck is very expensive and it looks like it's not very profitable for them, and it looks like they're going to take a while to ramp production. So I feel like they're not going to just be this natural. Plus, we've seen a lot of people in the truck market kind of pull back on buying these trucks. When they started using them as real trucks, they didn't seem as attractive. What I would say is kind of Tesla's ace in the hole, or ace in the PowerPoint maybe, is the supercharger network. That was a brilliant move for Elon to invest in that. Now we're seeing all the other car companies transition to the plug type that he's got in that supercharger network, and he's starting to open it up to other companies and other cars. He could end up with quite the subscription model if he becomes the dominant player in the infrastructure and power supply field.
About AI. Is Tesla an AI play? I mean, Kathy Wood would tell you so. Elon Musk himself would tell you so. He talks about full self-driving. He talks about vehicles that go around in Texas and California for days without a person operating those vehicles. Where do they stand as an AI play and self-driving autonomous vehicles?
Yeah, I mean, obviously, Elon sort of, set the moonshot for automotive excellence when it comes to self-driving. Every automaker, I think, today is an AI company, just like I think that every tech company today is or has to be an AI company. But AI isn't limited to simply just the autonomous driving. There are a lot of other systems in the vehicle that leverage AI. So whether it's entertainment or communications or productivity or diagnostics, all of those things are going to require AI increasingly. And so, yes, absolutely, AI is a huge component of the Tesla story moving forward.